All right, folks. Welcome to our Ask Me Anything session live here on YouTube. Let me know if you guys can. Chat is disabled for this live stream. Oh man, I'm gonna have to enable chat somehow right away. Becca's gonna have to get in here and help me get this thing right. Let's see, channel level settings. What do I got to edit? Customize. Live chat replay. It says live chat. I don't know. Reactions, live commentary. Yeah. Who can send messages? Anybody. Live chat replay. Yeah. Anybody. I don't know. Let me see if I reset it. Reload. Okay. All right. Well, now we got chat. Everything seems to be in order. It's 8:01. I love to do these live sessions. You guys can hear me. If you can see me, let me know. Give me a thumbs up in the chat. Who we got here? We got the Rebecca Neville, as always. Appreciate her more than you guys know. We got Archer, Al, Michael, Sonia. We got, let's see who else. We got Scott Tallman, Joseph, Pammy. How are you? Good to see you. Alexi from Wisconsin. Hope the weather's treating you okay, my friend. Yes, we are getting this party started right. And we are getting it started quickly. We got 8 questions that I got hit up with tonight for the Ask Me Anything section. And a couple quick announcements for you guys before we get going. But I do think I'll have time to get through all 8 of these questions before we're done. But as I always like to do to get started, I always like to make a general observation about just about the world. Last time I talked about basketball parents, right? I just got back from a basketball, tournament. And I found just the behavior of certain parents interesting, and I love to bring that up. And so this one is just an observation of like, help me understand this. I don't want to be judgmental about it, but just help me understand. We live, my family and I, out here in, the eastern part of the county, just, south of Tampa. And we got these cars. I was talking to my barber today about this. We got these cars that are super loud. And like when they come down from shifting, it's like, pow, 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 pow. Has anybody ever heard those before? Those kind of cars? You know what I'm talking about? Here's my question. Do any of you have a car like that? And genuinely, curiously, I'm asking, why? Like, what? Why do you have a car like that? A car that just like people can hear for a mile away? And do you like, do you derive joy from it? Is it something that like, I'm in the same way I try to climb into the parents' minds at the basketball tournament that like lose their brain. I just genuinely am curious when it's 1 o'clock in the morning and, I'm asleep and there's this like, and I'm just like, does someone just think, oh man, you know what I want? I want a car that can be heard from the moon. Is the thought like, I love like the sound of the roaring of the engine and the subsequent kapong, 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 kapong. Or is it just about a fast car? Do 2 guys who both have cars, like, do they pull up next to each other and affirm each other and be like, hey man, love your car. Love how loud it is. Oh, sweet. Your car is loud too. Like, is that a genuine, like, I play golf with the guy, 2 guys, again, for me, I just trying to understand because I just don't understand. And just like the parents, do any of you know anybody who has a car like that, who has genuinely explained to you like why they have it, why they love it, and what that's all about? No, nobody here? Nobody got that? Okay. Yeah, Paul's saying it's about attracting positive attention. Doesn't work. Yeah, I don't know anybody that like gets their eardrums blown out like from them, at a light and was like, you, man, you. Yeah, it might seem like it It's a car guy. Yeah, Bob. That's what I'm saying. I just don't know a lot of car guys, and so if there's car guys here, or you guys know car guys, I genuinely want someone to explain it to me. Um, you know, Mr. Lenko is like, if you're an enthusiast, it's like a breakout on a hot stock. Cool. Like I would just love to have a conversation with somebody, but they're always going too fast for me to catch them. Sorry, had to do that. No one can like genuinely give me an answer. I don't get it. So anyhow, it's, do you guys ever wonder that? Am I the only one that's like, why does your car, sound like that? Is that loud? Am I the only one? Is that you guys too? Anyway, well, this is my Ask Me Anything session where you guys get to ask me anything about the markets, about trading, about life. And I try to go into some of my chat rooms throughout the day and say, hey, if you got questions, let me know. So people put some of these questions into the chat, direct messages. And so I've amassed 8 questions that I'm going to go through with you guys over the next 35 minutes, but I have to ask your forgiveness because typically I will stay the full hour until 9 o'clock and then I have to, go. But now tonight I got to leave at 8:45. Unfortunately, friends, my wife lost her mother last weekend, and so she's been going through it and just been, doing a lot of crying, really tired. And so, she's trying to go to bed early. And so I got to leave and go pick up our son at basketball practice at 9 o'clock. And so mea culpa, I typically like to stay the full hour, but I won't be able to do that here because I got to go get my son so my wife can go to bed early because it's been a long couple of days for her. So if you are if you're the praying type, pray. Her name is Shannon. If you are the good vibes type, send your good vibes, positive thoughts, all those good things. But yeah, we appreciate you. Why am I here? Family comes first. She told me, she's like, no, you are not people are expecting you. We are a high duty family. And yeah, I have the duty to be here because I said I was going to be here. It's on the schedule. And so don't worry about it. I was taking care of her all during the day today. So don't worry about that. But appreciate the condolences and the kind words. And Joseph is saying, you're real proud of the kids nowadays. That's right. That's probably right, Joseph. Nowadays. Yeah. So, all right. Anyhow, let's dive into this today. I got these questions here for you guys. I'm going to share my screen so you guys can see what I see. And I'm going to go through these kind of questions one by one. Number one, and I might take these in no particular order. I think they are listed by how they were asked, but I'm going to go through each one of them and then tell you guys which one I want to talk about in general. And then we'll go through those one by one. But again, the plan is to have all these things squared away in the next 36 minutes. All right. And this last one is a great question. It's going to be the longest question. And so that's going to take me the longest, and I will save that for the end. So let me go through these and do the easiest ones first. Number one, can you please give us a quick overview of zero DTE trades? Advantages, disadvantages, theta burn versus risk. Sure. Let's dive into that one first. Okay. What is a zero DTE trade? So here it is. Zero DTE means 0 days to expiration, right? What does this mean? It means taking an options contract that expires that day. Right? So what does that mean? Number one, it means that theta or time decay of the option will be the highest, right? Be the highest. It's just going to be eating away at the value of that thing. Number two, right? It must make its move that day, right? Number three, right? If it's in the money, and you hold into 3 p.m., you might get a call from your broker if you can't cover, right? Which means have that exercised, right? So that also might happen. So you guys want to talk about advantages and disadvantages, right? What are the, let's talk about those advantages. Okay. Number one, which by the way, there's a gentleman at the publisher that I work for that has his service called 0 Day Mania. Jeff Zananiri is his name. And he's a very, very good trader. But I said it from the get-go, they misnamed that service. They call it 0 Day Mania. That is not 0 day trading. They're taking a trade going into close that expires the following day. That's 1 day to expiration. That's different. Okay. That's different. Advantages are that there isn't much premium left to pay on the contract, right? So if it goes up, you pretty much, it's just pure kind of, profit. You're not paying a bunch of premium left on the contract. But what's the disadvantages? Well, I've already mentioned disadvantages, the theta burn. Okay. That's number one thing. Other disadvantage, I would say, is the risk in the sense that, right, it must work that day or expire worthless, right? And so it's very risky. You're not giving it hardly any time at all, right? Hardly any time at all. And so, that's another disadvantage, I would say. One is theta burn is value expires quickly going into the close, going into the expiration. So that is a disadvantage. And I would say that this is like, very volatile, right? It can just move quick. And so you got to be able to move quick with it. That is a disadvantage. What's the advantages? There's not much premium left to pay. That's for sure. If it runs hard into the close, you can make a lot. I mean, we did this a couple of times just for fun, trading partner Ethan and myself. And I think one time he made like a 3,000% return because something just spiked into the close. Okay. So you can. And so as a result, because you can do that, right? You can take a very cheap out of the money option for pennies, and it can run, 10x plus, right? But you got to find the right ones. And so that is one thing I would say is that, a couple of things you guys got to know. Time decay will eat it quick. It's got to make a move that day, got to make it quick. If it's in the money and you're holding past 3 p.m., they could close you out if you can't cover. Advantages are you don't pay much premium, but if it runs hard, you can make a lot, but then you got to get out, right? And that's another disadvantage. Like you got to get out quick, or else the broker might close you out if you're in the money and can't cover, right? You can't actually afford in your account to buy all those calls once it's in the money. So I hope that answers your question. Can you show us how to place Fibonacci levels on the chart and what they mean? Sure, right? Let's go here. And here's the Fibonacci, right? I do a whole session on Fibonacci, a whole lesson on this. Basically, he was a mathematician. He talked about how there's symmetry in nature, symmetry in the human body, right? Like, for example, there's a thing called a Fibonacci sequence of like 2, 3, 5, so on. And so like the size of this is a 2, a 3, a 5, a 13, right? In terms of length. And so the way you do this with Thinkorswim is you would say, hey, I would take a fib here, and it's this percentage level, and then you just go from low, start low, go high. Well, excuse me, you can do it either way, but go high, go back to the recent swing low, and notice this thing beautifully. If you highlight in on it, okay, what happened was this thing ran up from the low It came back down and it hit almost perfectly that 50% retracement, right? Almost hit perfectly that 50% retracement, right? It held it here at the 618. And then what did it do? It went back up here. And then from here, you got the Fibonacci extensions, right? Where you can kind of try and have this estimate of like, where is price likely to go and where to go. It went pretty much to a double, came back down, hit that, 786, which you got to redraw it from here to here, this swing low to this swing low, and then went back up, hit that double again, 1, 2, 3, boom, fell back down. But again, you got your Fibonacci retracements, your Fibonacci extensions, and notice this thing kind of hit the extension here, hit the next extension of 1618, and then hit the extension of 200. So that is really what the Fibonacci is all about, trying to find levels to buy for pullbacks, and then trying to find levels to target when it actually finally does break out. Now, here's the question with Fibonacci, right? The question is, can this ancient mathematician that found symmetry between conch shells and the human hand and the human body determine symmetry that is likely to show up in the chart? Maybe, but really, is it the chicken or the egg? Is it the chicken or the egg? Is it happening because someone does exactly what I do and they're like, hey, I'm going to buy this one on the 618 retracement. So they put all their orders there. You see what I'm saying? Like, do they draw it out and it's that idea that everyone is buying, or is it the buying that justifies the idea? Right? I don't know. Right? I don't know. But I'm just saying that oftentimes it does work. And so I do tend to look at these things from time to time. But again, I will just say this. I edited my properties on these so that at the 382, it's green, red, yellow. I like to buy on the 382 retracement, right? But yes, the chicken or the egg, Jonathan, that's the thing. And then once it gets to 1618 by the twos, I tend to scale out once we get up 200%. But you can go in here under properties and you can change these colors, make them different weights. That's what I've done. And so, one thing you might want to do is, let me remove this. You can do the same thing here. You go, here's the high. Let me go here. Yep. Here's the swing high. Here's the swing low. And then what'd this thing do? Boom. Pull back to the 23.6 retracement. And then bam, bounce from there. So again, the further on the pullback you play it, maybe the better off. I always think that's the case, but that's how that works. And then this thing, ultimately went back, never got back to that 100%er, never came back to the bottom support. And then ultimately this thing, did kind of go back up and hit that extension. So yeah, that's your Fibonacci levels. And I think they're interesting, but again, I'm not yet convinced. Is it the chicken or is it the egg, right? Does the fact that everyone thinks it will create it, or is it reality making it actually work? I don't know. I'll be honest with you. I don't know. Let me take it off. Okay, that's number 2. And I'm just going to say you can draw this on Think or Swim with the tool. Right click on swing high and drag back to swing low to swing low to determine, right, the retracement levels, the potential retracement levels to buy from. Or the possible, yeah, you're giving me Evernote next week. I appreciate that, Becca. I probably need it. Or the possible extensions to sell from, to sell at. All right, there we go. Cool. Next. In this type of market, do you ever hold overnight or over the weekend? I feel like I missed out this morning when everything went up so high. Well, why did my friend say he felt like he missed out? Well, because if you had got into a SPY call on this drop on Friday, and then you woke up today, what happened was, right? You got in here maybe at 650. This thing opened up here at 660. That is a heck of a bounce. Now, you asked me the question. In this type of market, do you ever hold overnight or over the weekend? What's my answer? Yes, but only in strong sectors. I have been holding, right? So I've been holding calls in CVX. What else? What are these names? Let me just go look at my CVX, DVN, KMI, Oxy, APA. What do all those names have in common, my friends? What do all those names have in common? All of these names are in the energy sector, which is in an uptrend. And therefore, I follow the advice as long as it ain't doing anything wrong. You gotta stay long, right? Right? As long as they ain't doing anything wrong, you got to stay long. And you look at XLE, XLE is doing nothing wrong, right? That is a sector in the midst of this market. That's the SPY, right? Broke, downtrend, wah, wah. And then you look at XLE. What's XLE doing wrong? Not a dang thing. In fact, it pulled back today to this gorgeous previous area of 57.75. And I didn't buy XLE, but I sure as heck bought CVX. Right? This thing looked beautiful. And then bam, boom, popped right back up there, right? Like a gem. And so, yes, I do hold names overnight, but only, right? If it's in a strong sector or it is an extreme downside move. Okay. Right. So, you feel like you missed. Okay. Here it is. Right. You didn't miss anything. All right. In this market with a VIX at 26, right? It's better. Your job is to protect your capital. So don't feel like you missed out on anything. All right. If you're protecting your capital, you're not in overnight and you're not taking that in any other sector, then you're fine. If I only have one contract, when do I sell since I can't scale out? Right? Two options for you on when to sell, right? Option one, 20%, right? 20% is one option. I would say maybe three options. One is just 20%, right? Is pay yourself and get the confidence, move on. Number two, I would say option two is at your target, right? So you want to set up a good risk to reward, right? Which might be, right? Example could be, like a 3-to-1 risk to reward. Okay. And so if you are risking 50 cents with a target of 150, well, then let it work or not work, right? Let it work or not work. If you do the work to put in the risk reward beforehand, why would you cut yourself short? Or option three is on a close below the 8 EMA, right? That way you continue to let it run. And if it closes below the 8 EMA, then it lost momentum, right? And so let's just look back at this level, here. Let's say, right, you are in, let's say, a recent name that has surged. Let's look at this name, Fastly. Okay, Fastly. Here's a name that's been strong. Okay, look at this. Beautiful name. All right, let's say you're in Fastly here and you got earnings and you get the earnings gap up and you buy this thing. Where do I pay myself? Well, it comes back down, hits this, never closes, bam, higher, bam, higher. Did it ever close below the 8 EMA? So you could have got out at 20 and then kicked yourself because you're like, oh man, it's up there. But if I got time and it's not done anything wrong and it just keeps getting supported by the momentum moving average of the 8, boom, 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 stay in it, right? On any time frame, Alex Edwards, any time frame, right? Any time frame. That's it. Any time frame. Okay. All right. Let's go to number 5. What is the VIX and what level do we want it to be at? Is it the same as the VVIX? Okay. What is the VIX? Let's do it. Right. And it's not the same, right? And I'm not going to go in and tell you what the VVIX is because you have Google. By the way, friends, Google's your mom, right? Go ask your mom, right, what the VVIX is, okay? But the answer to this is no, right? Ask Google what this is because I could spend the time, but you guys just go ask Google. So why, let's put my time into something else here. So what is the VIX? The VIX is the fear index of the market, right? It is the gauge for volatility, right? It impacts the cost of options, all right? Now, here's the thing, right? As it rises, there is more fear / uncertainty in the market. That's why options prices go up because they don't know what's going to happen next. So they got to price in for that uncertainty, right? It usually works inverse to the market itself, right? Now, I have these rules about the VIX, okay? I have rules about the VIX. For me, these are my rules, right? And I'm going to show you these levels. Here's my VIX levels. Right? My VIX levels. Right? In fact, let me show this. Studies, edit studies. Here we go. There it is. Bam. Okay. So here's my levels. Caution level high, right? Caution level low, still caution level, just low, right? Time to be nimble, right? Time to be nimble, time to slow down, right? I'm sorry. Right? Now, here, sorry. There we go. Okay. So here's my levels. And you can see it over here. Actually, you can't because my head is blocking it. Let me, right? Closing this out. Cool. Here we go. Now, here's my levels. Move this up. You guys can see them, right? So above like 1966, 1975, I would say right? It is a caution level high, right? Once you start getting to the 20s with VIX, that is generally not normal. And I'll explain that in a second. Now, if you're between like the 18 and this level right here, it's it's starting to kind of creep up there, but definitely caution, but not high caution over 1975, right? I would say here for caution level, right? Day trade. That is over 26 is kind of where I'd go on that one, right? I'm only day trading probably over like 25, 26, all right? Because it could go anywhere. It could do anything, right? It's all over the place. And so those are the levels. So I would say is over, how do I make that? Over 26, over this, okay? Over that, yep. Over this, and then over this, over 1414, it's low. The caution level is low, right? Very low. And then below that, below 1440, right? This is called follow through time, right? Where names tend to follow through. And you say, hey, why would you say that that's low? Well, let's look at this historically for the past year. Notice the VIX had this spike up here during the tariff session in fears, came back down here, got below the 1975. And then from about June 24th, when it broke back down below this, minus this one little crazy week here, and we stayed down here, this was the best time in the market to trade right here, right here. Oh, that's very kind of you, Jag OMD. Appreciate very kind words, right? This is a great time to trade in the market. This is when I made the majority of my money in the market. I made a good chunk on this spike because I had, I had an inkling of the bounce back, but right, this was the best time. All of this under 14, I'm sorry, under like the 1660 level, just down, 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 down. Keep touching 14, 14, 14, 14, right? And then what happened? We spiked back up October 10th on that massive candle, and that was all she wrote. And then we got chopped ever since. So you want it low. That's what you want. You want the VIX low for more follow through. In the meantime, you just got to be cautious. Okay. What is your macro thesis for the next quarter Q2? Q2, this is my thesis. We will continue to have a high VIX environment, and the chop that comes with it until we have some clear resolution, victory, or plan, or I should say, or progress for the Middle East, right? Until then, expect chop because of the uncertainty and the high energy prices that result. That's my thought. That's my thesis. How do you decide when to pick a contract that is in the money or out of the money, right? In the money or out of the money? Couple ways, right? Generally, I like just out of the money for directional calls. All right, directional calls. This allows the options value to increase at a faster pace, right? When it's just out of the money, right? So that's like a delta of 30 to 50, 30 to 50, right? But, if sometimes I will go just in the money, because when I do that, I'm not expecting the name to move very strongly. Or I should say this. I'm like, here, let me just show you the options contract actually, so I can kind of better illustrate what I mean. So let's go to, like, let's say like Apple calls, right? And you look at Apple calls, and I want you to notice something, right? When you go to Apple calls and you go kind of in the money here, right? This is like some of the highest premium you're going to pay, but it's at this point, it's about the delta. Sometimes I will go to like a delta 70, because the value of the option will be less affected the more in the money I go, right? Notice this, 70 cents here off of 13 bucks is a lot less than 56 cents off 8 bucks, right? Just a lot less. This is, I mean, that's almost like, 5% of the total, while this is closer to 10% of the total, right? So that's why I say, if I'm not expecting the name to move very strongly, I often times go just in the money for a better, what's called delta to price percentage, or ratio, really, right? Meaning the options price won't be impacted as much if the name moves slightly, okay? The name moves slightly. It won't be impacted as much, and the option is more expensive, so the theta decay won't bother it as much either, right? So I'm buying myself time, if that makes sense. So that's generally how I pick those two in general. Okay, here's the last one. It's a big one. I got 7 minutes to teach you guys how to do this. And it's a great question. All of you are gonna wanna know how to do it. I'll make sure to teach you. How do you set orders to execute at a future date, time, when price action hits a certain value? Is it correct, that my understanding, when you place an options trade, that the buy price is based on whatever the current price action of the stock is after being ran through a calculation based on theta, delta, etc.? So the reason why you don't set a buy price on the stock target is because the price of the option reflects the cost of that contract based on the current stock price. And if I follow that logic, then would the price of the contract vary at the stock's price action? Well, the answer to this, based on that logic, is yes, it would vary, right? And so here's what I would say, right? Here's what I would say. If you want to set up a buy for an option based on the price action of the underlying stock, there are two ways to do this. One, do the math, right? Do the math and just say, hey, I want this thing to pull back $1. It's at $1. The option's at $1. The delta's at 20. And so the delta means it's going to move 20 cents for every dollar it drops. I think it's going to drop to 80 cents if it moves back $1. So I'm just going to estimate, right? Do the math and estimate. This won't be exact, but you can get close, right? Can get close if you get the timing right, right? Option 2 is you set up an exact order, right, on your broker, telling them to buy the underlying or buy the option at the market price. Now you can do other prices, but I'm just going to say market price when the underlying stock pulls back to that price. And I'm going to show you how. I'll show you how. Here's how you do it. Okay. So I gave the idea of CVX. Okay. CVX. So here is CVX on the daily chart, right? Here it is on the daily chart. All right. And I said, hey, I like it if CVX can pull back down here to this 200 mark, right? I would like the April, I think it's the May 15, 210 calls. So how would I do that? I'd go in here. I would go to CVX. I would look up the May 15, 210 calls. I would right click, buy, single, right? Single. And I would say down here, and my head might, can I move my, you know what? I'm just going to move this thing actually. So you guys can see it. All right, great. So I'm going to move this to 1, down to 1. Okay, buy 1. Let's just say we buy 1. And you go over here, this little cog right here, this little cog, and you left click that, and it brings up this window. And I'll say buy at market, right? Good till cancel. So I'm buying the CVX May 15, 210 calls, right? Under these conditions, when CVX mark, which is the price, is less than or equal to 202. I want to buy it on a pullback to 202. And then I click save. And then I click confirm and send. And then this is what you got to make sure. Buy CVX May 15, 210 calls at the market. So market price, whatever the ask is, at the market. Under what conditions? When CVX's mark or price is at or below 202, right? Now it's going to tell you your break-even stock price and FUI. Don't worry about that, right? That's only if you hold it all the way to the end and all that stuff, okay? But again, this is going to tell you what it's going to cost you. It's going to cost you $735 right now, not what it will, but right now what it would cost you because it's trading at $735, right? Plus 65-cent commission, plus that 0.1 cent, right? And if you want the fees, you can go through here and find them all, commissions and fees, all right? And then this is going to affect your buying power, all that stuff, right? All right here. It's on my smaller options account. And then I would click send, right? I would click send. And then that would have that price order sitting there waiting for it by clicking send. I'm not going to click send on this, all right? But that's how you go through it. So again, I'll show it to you. Then I got 2 minutes. I got to go, right? You go here. You click this little cog. Once you go right click, right click, you go buy single, right? And then it's going to bring this up. How many do you want? Let's just say 1. You go to this cog, left click it, brings up this window, and you say, I want to buy at the market, good till cancel. These options, May 15th, 210 calls, when CVX mark is less than or equal to 202, save, hit confirm and send. Make sure you read this out loud so you know what you're talking about. Then click send, and it will have that order sitting there and waiting for you to buy that, waiting for you to buy that. So I did this morning on CVX. So I market, not limit order. Now, Jonathan, you can have a limit order if you want, but for me, I just want to buy it, right? I just want to buy it. You can do that. You can say something different. You can say, don't buy it at market, buy it at, a limit. And then you say a limit plus what? And it's a limit, bid, maybe bid plus, you can go here and say, okay, what's this trading at 110 by 160? So you could say, buy it at the bid. And what's the middle of that? That'd be 235, the bid plus, 25 cents. You can get tricky like that if you want to. I don't do that, right? Now I just buy it at the market if I want it on that pullback. That's what I do. So, all right, friends, I'm starting to go. It's 8:45, so I got to run get my son from practice. I don't want him waiting there too long. But I wrote up these notes, the answers to the questions. I'll make sure that you guys I'll have that. Actually, you know what? Before I go, let me put that into a Google Doc and I will share it with you momentarily. Let's do that. There we go. File new. And then next week, yeah, Becca will set me up on Evernote and we'll get that squared away. All right. This is the great. All right, here we go. And share. Copy link. And we're going back to you all. And here you go. Boom. That's the link. Those are the notes. Friends, do you sell at the market? No, I oftentimes don't sell at the market. I oftentimes have my price sitting up there, Bob Bengals, waiting to take me out. And I'd like to have price reach up to my order and take me out rather than just sell at the market. I tend not to do that too much in general. So, all right, friends, I got to go. Appreciate you guys. Hope this was helpful. You guys got a lot of info from this. You got the link to that in the notes. You guys can take those notes, use them with you. And then this will be recorded. You guys go back and watch it again as long as you're a subscriber, I believe. So thanks for being here. I got to go with my boy. Y'all be good to others. And we will do this again soon. Make sure you subscribe on YouTube, subscribe at bensturgill.com so you can stay up to date on all the live free sessions I do to make sure I help you guys out, become better traders, and hopefully in turn, better people. Be good to others. We'll see you guys soon. Peace.